Hey everyone, welcome back to the channel. Today, we're diving deep into a topic that every smart investor needs to understand. What happens if the US dollar collapses? And more importantly, how you can protect and grow your wealth if it does. As more countries move away from relying on the US dollar, financial experts are starting to raise concerns about its long-term stability. Historically, the dollar has been the world's reserve currency, but even the strongest currencies can fall. In fact, research from the American Enterprise Institute shows the dollar has lost a shocking 96% of its purchasing power since 1913. Now, that doesn't mean the dollar will vanish tomorrow, but it does mean you need to be prepared. So, in this video, we're going to uncover 7 powerful assets that could not only protect your purchasing power, but potentially even make you rich if the dollar declines or collapses. Let's get into it. First up, at number 7, we have gold, silver, and other precious metals. For thousands of years, these metals have been the ultimate store of value. They've outlasted empires, economic collapses, and wars, always retaining their intrinsic worth. When paper currencies lose value due to things like inflation or reckless government spending, people flock to gold and silver because their supply is limited. You can't just print more gold the way you can print money. That scarcity is what makes them a powerful hedge against inflation and political instability. However, investing in precious metals isn't always simple. If you buy physical gold, like coins or bullion, you have to think about secure storage and insurance, which can be a hassle. That's why many people are now using gold IRAs. These are specialized retirement accounts that hold physical gold for you in secure vaults. Beyond gold and silver, you also have platinum, palladium, and rhodium. These all have industrial uses and investment value. They're rarer and can be more volatile, but they offer great diversification within your precious metals portfolio. The bottom line is this: precious metals might not generate passive income like stocks or real estate, but they protect your purchasing power and act as a safety net during financial chaos. Coming in at number 6 are collectibles. The market for collectibles, things like fine art, rare cars, sports memorabilia, antiques, and even vintage wine, has surged in popularity among wealthy investors. Why? Because these are tangible assets with real-world value that often appreciate even when paper assets are declining. Art, for example, isn't just beautiful, it's a form of wealth storage. When a currency weakens, wealthy individuals often park their money in rare, unique items that maintain their value globally. Classic cars and sports memorabilia are also highly sought after because of their cultural significance and rarity. Even things like comic books and vintage toys have exploded in value, thanks to nostalgia and pop culture. That said, you need to know what you're doing. Collectibles require knowledge, patience, and a good understanding of the market. It can also be challenging to sell them quickly if you need cash. Still, if you choose wisely, collectibles can be powerful, inflation-proof assets that grow in value while traditional markets are all over the place. Next, at number 5, we have foreign currencies. Another smart way to protect your wealth is to diversify across different currencies. If the US dollar were to collapse, holding foreign currencies like the Chinese yuan, the Japanese yen, the euro, or the Swiss franc could act as a financial shield. The logic is simple. If the dollar loses value, stronger or more stable currencies can help preserve your purchasing power on the international stage. Of course, no currency is completely immune to risk. Every nation faces its own economic challenges, from inflation to political instability. That's why experts recommend spreading your money across several strong currencies and regularly checking in on your holdings based on global trends. Remember, the goal isn't to bet against the dollar, but to hedge against uncertainty. At number 4, we have Bitcoin and other digital assets like Bitcoin and Ethereum are often called digital gold. They operate outside of traditional banking systems, which makes them very appealing when people start losing trust in fiat currencies. Because crypto is decentralized, it's not directly tied to the US government, banks, or the Federal Reserve. This independence means that during a major dollar devaluation, crypto could act as a hedge. However, and this is a big however, crypto markets are extremely volatile. Prices can skyrocket or plummet dramatically within hours. Even legendary investors like Warren Buffett have warned against relying too heavily on them. Still, cryptocurrencies have one undeniable advantage: portability and liquidity. You can transfer large sums of money around the globe, 24/7, without needing a bank. For investors seeking diversification and a bit of tech exposure, allocating a small percentage of their portfolio to crypto can be a smart move as long as you can stomach the risk. Moving on to number 3, foreign stocks and mutual funds. When the US dollar weakens, foreign stocks and mutual funds can become powerful tools for preserving your wealth. By investing in companies based outside the United States, you gain exposure to stronger currencies and growing markets. For instance, if you own shares in a European company and the dollar falls against the euro, the value of your investment actually increases when converted back to dollars. You can access these investments in a couple of ways. You can directly purchase foreign stocks on international exchanges, or you can buy what are called American depository receipts. or ADRs. These represent shares in foreign companies but trade right here on US exchanges. Another popular approach is to invest in global mutual funds or ETFs that track foreign markets. These funds offer instant diversification and make it easy to get international exposure without having to manage individual stocks. If the dollar depreciates, the value of your international assets can rise, creating a natural hedge against US inflation. Our number 2 asset is a classic, real estate. For a long time, real estate has been one of the best ways to protect against currency collapse and inflation. Unlike stocks or bonds, real estate is a tangible, income-generating asset. Even during economic uncertainty, properties often retain their value because land and shelter are always in demand. When the dollar weakens, property prices tend to rise, and rental income usually increases right along with them because it's tied to inflation. You can also diversify geographically by investing in both domestic and international properties to spread your risk. Platforms like Airbnb make it easy to generate cash flow from short-term rentals, while REITs, or real estate investment trusts, let you earn passive income from real estate without having to manage properties yourself. The main drawback is liquidity at S. Not as easy to sell a property as it is to sell a stock. But if your goal is long-term stability and inflation protection, real estate remains one of the safest wealth-building vehicles in history. And finally, the number 1 asset on our list is one of the oldest and most powerful of all: land. Unlike currency, stocks, or even gold, land is finite. They aren't making any more of it. And as the global population grows and development increases, the demand for land consistently rises. This scarcity gives land its intrinsic value and makes it a cornerstone of generational wealth. Investing in land, whether it's for agriculture, development, or just to hold, allows you to own a real, enduring asset that can't just vanish in a market crash. While it might require a larger upfront investment, land often appreciates steadily over time and can be leased or developed for income. So, there you have it, 7 assets that could protect your wealth or even make you rich if the dollar collapses. To recap, we have gold and precious metals, collectibles, foreign currencies, cryptocurrencies, foreign stocks and funds, real estate, and land. The key is diversification, spreading your wealth across different assets to minimize risk and maximize your financial resilience. No one can predict the future of the dollar, but by preparing now, you can ensure your financial security no matter what happens next. If you found this video helpful, don't forget to hit that like button, subscribe, and ring the notification bell so you don't miss our next video on financial freedom, investing, and wealth protection. Until next time, stay smart, stay diversified, and take control of your future.